All right, is the rally over? Is Bitcoin starting to face a new wall? Or is this the breakthrough that everybody's been looking for? We're going to try to get into all this good stuff for you guys today. My name is Paul Barron. Welcome back into Tech Path. Before we get started, if you guys have never checked out our market sentiment index, make sure and jump over to PBN. You can just go to Paul Barron Network and find it. It's right there. One of the things we do on the MSI is we break down a whole variety of tokens. You can go into the dashboard. This will, of course, measure sentiment. Gives you a full blend of both TradFi sentiment as well as crypto sentiment. We even jump into NFTs and also TA. So we've got a lot of additional content over there that you guys can check out. Make sure and just, when you go to PBN or Paul Barron Network, all you have to do is click right there at the top, market sentiment. I'll show you some examples of that here in a bit when we break down Bitcoin. Let's get into it today, though. I want to jump over to the first tweet right here. And this is Peter St. Onge. This is a very interesting statement he made right here. And I shouldn't say him, but inflation in effect is a hidden tax. The money that people have saved is robbed, part of purchasing power, which is quietly transferred from the government that issues new money. This is by Thomas Sowell. If you've never listened to Thomas Sowell, just search his name on YouTube and go listen to some of his talks. He's probably, I think, one of the best economists out there in maybe our lifetime. Very astute into really understanding money, but more importantly, understanding the cycles that start to happen here. And that's really what we're going to be breaking down today. Is this a cycle for Bitcoin and other digital assets that could be starting to really roar while we're starting to see that turn down in the traditional markets? All right, so I want to go over to this first clip right here. This is the first time Jerome Powell seemed a bit doubtful. Listen in.
For the first time, you have Jerome Powell, who had never been doubtful as to what he did, even though he has been sometimes wrong on expectations of inflation and interest rates, finally said in his Economic Club of New York talk, as well as in the Q&A session, that he did not know what is causing the higher bond yields. He attributes that to term premiums. The term premiums are not measurable. And therefore, essentially, the Fed chairman comes down to saying, I don't know what it is. And when he said that, I said, we are in completely uncharted territory. Things are going to get worse next week because of the fact that the Fed is totally out of control and they don't know what to do next.
All right, so this is a very interesting statement. Fed's totally out of control, don't really understand the course to take next. This tweet kind of breaks it down a bit more. Feels like a mildly risk-off day. Stock futures are down, copper prices down. 10-year Treasury yields are about to cross the 5% threshold, a move that once again challenges the idea of the debt as a haven in times of weakness. So this has been the kind of the talking point that's been dashed around Wall Street over the past 2 to 3 weeks. And a lot of people have looked at this and said, okay, these are the indicators. These are some of the things that could really start to take the market into a very interesting position, much like what the clip we just played, kind of no man's territory. I want to go to this next clip because it'll start breaking down the things I think that will help you guys get a bigger understand of when QE might take place. Listen in.
Whether it be a huge bank failure, whether it should be pension funds losing a lot of money, commercial real estate suddenly worsening, or a CLO, commercial loan market, and levered obligations having difficulty, somewhere things are going to break. And rather than expecting 3 to 6 months, I'm going to say within the next 4 or 5 weeks. Just look at last March to give yourself an indication. We had 3 small regional banks which failed. And immediately, quantitative tightening ended and quantitative easing was put in place. We took the Fed assets back to November of 2022. We set it back by 5 months. What I'm saying is if that incident could do that, anything like a bigger crash taking place in the next 2 to 3 months is going to completely reverse monetary policy in terms of both interest rates and quantitative tightening. And yes, within the time period that you mentioned is clearly when I think it will happen. 2024 is going to be a year of lower interest rates and clearly a much more easier Fed than we have seen so far.
All right, so with him making that statement, the question will be when those interest rates actually get started in terms of a pivot. And I look at these statements here, especially some of these economists that are looking at this from a more of a global perspective. And then you look at this current rally that is currently underway. Right now, look at Bitcoin. This is a good example of just the sentiment data coming up here from around the 13th. And all of a sudden, Bitcoin is moving. And it's very interesting because now we've got amplification and top line sentiment kind of moving in unison, where we were seeing a little bit of a separation here over the past 30 days with Bitcoin in general, meaning it was kind of flat. So with this being the case, and to his point, the analyst's point is, are we maybe just 3, 4, 5 weeks out from a real problem in the market, whether it is new data on the real estate industry or some of those things that could really be those things that have been lagging for a little bit of time here and start to truly break, which would definitely cause the Fed to cause a bit of an about face. Still don't know if that's going to happen. I want to play a clip here by Raoul Pal on his consideration of what a recession might look like. Listen in.
I just wasn't that bearish.
Yes.
And the market had priced it in last year.
Yes.
Which was the big thing to me. It's like, when ETH bottomed in June, Bitcoin, the rest of the space bottomed in October, that was like, it's all priced in. We've got it all in.
But you said you think we will have a small recession, as in it's still on the horizon?
Yeah, it doesn't matter because the market's looking forwards, so it doesn't matter. Everyone's like, I want my recession, I want my 50% sell-off in the S&P. You're not going to get it. You had the mild recession sell-off last year. That's what we're going to get.
All right, so 2 points there from those two clips. One, catastrophe is about to happen, catastrophe. And then Raoul's point, which is this is going to be a little bit softer, but yet at the same time, remember, these assets start to move first. And this is something we've talked about here on the show quite a bit, is that these early market moves are when we're starting to see the tail end of other downstream. Now, when we see the tail end, there's that last little push that we've seen so many times in these cycles before. Many economists still believe that that's going to happen with traditional markets. Raoul is kind of on the other side, that maybe that liquidity has already exited, and we've already seen that. The question will be, is that the limit of liquidity in the market, or will there be one last push, which could push people into gold and Bitcoin? And which obviously we've seen both gold and Bitcoin flying over the last 30 days. So it's a very interesting time. But when you think about crypto outperforming, because in reality, if you look back at the first of the year to where we are right now, I mean, come on, guys, these risk assets have been outperforming everything on the market. Listen to this clip.
Why crypto outperforms is really simple. It's got a faster adoption curve. It's a technological adoption story. Everything else is noise. It's technology plus debasement. NASDAQ is the second best performing asset. Why? Technology plus debasement. People who invest in their 401k, in the S&P, passive index, they never get ahead. So because property goes up and gold goes up and all of the assets go up the same amount. So you're just not making gains. NASDAQ and crypto have been the only two assets that do it.
So an interesting point there to his issue is when you look at even the S&P outside of the Magnificent Seven has been down for the year. You put those in, and those 7 stocks alone in the tech sector, mostly tech, have been able to salvage what's happened on traditional markets. And I would agree with Raoul in the sense that innovation and technology, because this is really a tech move, and we talked about this, Web3 is about to shift everything. We're going to see digital assets truly come to light in the United States under some new regulatory guidelines. So all of this is good. Now, the other things you have to look at is, where is this pump coming from? If the market is really down, why are we starting to see Bitcoin moving along with some of these other key assets? Here's a post by Kobayashi talking about the events in China. A little bit happening right now. Obviously, we know about Evergrande, largest tax cuts since 2008. That's another big one. Let me kind of zoom in on that for you guys. Interest rates now lowered on $6 trillion of mortgages. That's another major. Could you imagine that if you had an ARM and you start to see lowering interest rates right now in the market we have right now with 8% interest rates? Unexpected rate cuts, most since 2020, and then bank run begins at Bank of Shenzhou. And then, of course, bank cut deposit rates for the third time this year. Government plans another new stimulus package. This is more liquidity going into the market. So could that be the factor in Asia that is starting to push Bitcoin into another local high, possibly beating the one that we had back in July. So there's a lot happening globally, especially when you think about what's happening just, from a macro standpoint in Israel, Ukraine, etc. All of this is coming to a head, and it's winter. Energy prices are going to rise. What is going to happen here in the next step? This was from Eric Balkunas talking about the ETF front. BlackRock is stating their recent spot ETF amendment that they are seeding the ETF in October. So that tells me something. Don't want to read too much into that, but if this new info is not original filing so noteworthy, especially with BlackRock, this is a good one because this tells me they're getting ready to make this available on the open market. And remember, we've talked about this with the ETFs in the past couple of weeks, and that is first mover may not necessarily win this one because there's going to be so many available. It's going to be the best marketers. So seeding it is a very interesting strategy, I think, that BlackRock is taking. Here was John Deaton kind of going in on this in reference to the SEC. Couple points here. They've capitulated on the spot Bitcoin ETF approval before the end of the year, or certainly before the end of the first quarter, or the SEC is gathering more information during these discussions to come up with a different reason for denying it. I don't know. He's not putting it number 2 past Gensler because Gensler just has such a burr in the saddle. But I think with other things happening in the House with possibly a new speaker and also all the pressures that we're seeing globally and what we're seeing in the markets right now, I think Gensler may have seen his last denial. We'll see how it goes. I want to play another clip here of Hester Pierce. This is also going to kind of shake you a little bit. Listen in.
Maybe the SEC is now more open to approving one of these types of funds. Is it?
I can't say whether or not the commission is ready to approve a Bitcoin exchange traded product. I've been thinking we should approve one for the last 5 years. So the logic for why we haven't has always mystified me. I can't guess as to my colleagues' approach to this topic.
You spend time with them, you talk to them. Do you see any shift in terms of that type of thinking, just even generally speaking?
I really can't speak to what we're going to do on the Bitcoin exchange traded products. I can say that generally the agency has not been very good when it comes to anything related to Bitcoin or other crypto assets.
I guess the question is, should the public take anything away from the fact that a BlackRock or a Fidelity is applying for these things, that somehow is validating this space in a way that perhaps maybe some of the smaller firms that had applied for such types of funds earlier did not?
People have to be careful about trying to read the tea leaves of what agencies are doing, and I'm not going to contribute to that. I'm just going to say that, obviously we're seeing more and more interest from firms in these products, and I hear a lot of interest from investors in these kinds of products as well.
This clip we just played, it made me think of Hester Pierce a bit differently, much less without fangs, I guess, in the sense, because I felt like she was one of the few commissioners that had a very strong position, and it doesn't sound like she does. Now, granted, they still are in the right camp of we think these should be approved, and yes, I'm not sure what the rest of them, meaning that does she really have control? It really boils down to Gensler. Gensler is the guy that's going to make this or break this, and I think the key here, and I want you guys to watch what's happening in these sessions that are coming up in Congress this week. There's some hearings. There's 2 specifically that will most likely include crypto, and I want you to be thinking about that because it's very possible that Senator Warren will be able to get the crypto army out in place. That may start to give us a little bit more insights to what's happening here. North America, though, is North America's market in terms of crypto is more driven by institutional activity than any other regions. This comes over a chain analysis report. When you look at a couple of things in the article, I want to kind of zoom in on this for you guys. Estimated transactions volume around 1.2 trillion. This is just from July 22 to 23. And then you look at just this comparison between Canada and the United States, obviously dwarfs it. North America's crypto market is predominantly influenced by institutional activities, which only goes back to the point we're making here when we look at the opportunity with what could happen with BlackRock and the other ETFs that will play into this, because this is going to be a big part of this and a big opportunity to kind of take it to the next level. And I want to go out on a clip that kind of ties this all together because there's so many potential market upswings that could be in front of us right now. The traditional risk assets like Bitcoin, Ethereum, some of the blue chips in terms of the altcoins, and then you start to move into the Web3. Remember how fast Web3 NFT projects move directly behind these? Listen to what Raoul Pal had to say about the NFT market as we take a look into the next rally.
The Ethereum economy acts like the US economy. So if you look at the US economy, assets lag the economy. So the stock market's been going up. It's had a good year so far, but house prices are going down. And art is still going down. And the magic one is Rolex watches. So Rolex watches are still going down. Why? Because none of us have got any money, right? So there's no liquidity. That is exactly the same chart as NFTs. I think NFTs are much bigger than almost anybody understands. Everything we do as humanity is a contract. Me turning up today was a contract. It wasn't a written contract, but it was a verbal contract. You and I agreed, and I came, as with everybody here. Humanity is organized around social contracts, just contracts in general. It's how we organize. Religion's contract. Every single thing we do is a contract. Every payment we make is a contract. NFTs are the ability to store that.
So I think Raoul hits it on the head there in the sense of the opportunity of innovation. And obviously we talk about Web3 here and quite a bit about just NFTs as digital assets and a lot of things from gaming, et cetera. The point being is that the opportunity here for NFTs is going to explode beyond anything you've seen before. Step away from just gaming, think about loyalty. Now we'll get into payments, all of that happening at the same time. So definitely some very interesting things. If you look at the Bitcoin chart right now, this is kind of just showing back to where we were in July, mid-July. This was the last time we saw the 32K margin that started to slide in. It was around 31.9. And we're holding that 31,000 position right now on a very strong 4-hour candle right now that, as you can start to see, is starting to approach in on that. Now, the question will be, is this where we see a little bit of a trend reversal, or do we see Bitcoin blast through to that 32K mark? If it does, this is what we could be seeing in terms of an early move before a market adjustment timing. Because remember, timing here is very critical with the rest of the markets as they start to trend down, including the S&P, how gold has started to get a little bit sideways, and obviously the macro pressures that could be putting the Fed on its heels. All this happening right now. Nonetheless, legislation, speaker, you get the point. So a lot of this, we're going to continue to cover this for you guys. There's got a lot going on this week. Make sure and stay tuned right here. If you're not subscribed to the channel, make sure and jump in right now. Hit subscribe and click that little bell. When we go live, it's going to give you a notification. We're trying to get more lives out for you, but that at least will give you a notification and let you know when we are out there. If you're not in our Diamond Circle, make sure and jump in that as well. It's our free additional content location. You can do it in the Substack or just visit, Paul Bearer Network. It's very easy. Just click the link down below. It makes it super simple to get more content from us. If you guys want to catch me out there on X, it's @Paul Barron. We'll catch you next time right here on TechPath.